So you want to buy a house?
Who doesn't, right? It's the American dream, isn't it?
Absolutely. But before you start, touring open houses and all that, there's a crucial first step.
Let me guess, it involves paperwork?
It does, but it's all about getting pre-approved for a loan. Think of it as like knowing your budget before you hit the shops.
Okay, yeah, that makes sense. So how does one actually get pre-approved?
Well, according to Brent Knapp at the Loan Factory, there are three main areas lenders look at. First up, your credit score.
Oh, the dreaded credit score. I've heard it's like a financial report card or something.
Exactly. It shows lenders how well you've handled borrowing money in the past. Anything above 740 is considered excellent.
Wow, 740. I'm aiming for that. What if you're not quite there yet?
Brent says scores between 700 and 740 are still very good, and even 680 to 700 are, like, doable. You can still get good financing options with scores between 640 and 680, and they can even look at options below that.
Okay, that's good to know. So credit score is the first hurdle. What's next?
The second area is your capacity to make payments. Lenders want to see that you have a stable income and aren't already drowning in debt.
Makes sense. They don't want to like lend money to someone who can't pay it back.
Precisely. They'll look at your employment history and how much income you can verify. Then they'll calculate your debt-to-income ratio.
Debt to income ratio? Sounds complicated.
It's just a fancy way of saying how much of your monthly income goes towards paying off debts. The lower the ratio, the better.
So if I have a lot of debt, it'll be harder to get approved?
It could be. It depends on how much income you have coming in. They need to make sure you can comfortably afford your current debts plus a new mortgage payment.
Got it. So stable job and manageable debt are key. What's the final piece of the puzzle?
Cash. How much are you willing to put down versus how much you want the lender to finance?
Ah, the down payment. The bigger, the better, right?
Generally, yes. The more you put down, the less risk for the lender and the more options you'll have.
So if I want to put down as little as possible, it'll be tougher?
It might be. Lenders see 100% financing as riskier, so you might face a higher interest rate or stricter qualifying requirements.
Okay, so saving up for a decent down payment is a smart move.
Definitely. It can save you money in the long run and open up more financing options. So, to recap, getting pre-approved boils down to these three areas: credit score, capacity to pay, and cash.
Credit, income, and down payment. Got it. It sounds like a lot to consider.
It can be, but it's worth it to know where you stand before you start house hunting.
Absolutely. It's better to be prepared than to, fall in love with a house you can't afford.
Exactly. And remember, Brent Knapp at the Loan Factory can help you navigate this process. What are some of the benefits of getting pre-approved?
Well, for starters, it gives you a realistic budget. You know exactly how much you can afford.
True. It also shows sellers that you're a serious buyer.
That's a great point. In a competitive market, that can give you an edge.
And it can speed up the closing process once you find a house.
Nobody wants to, wait longer than they have to.
So where do people start?
I think talking to a professional like Brent Knapp is a great first step.
Absolutely. They can assess your situation and guide you through the process.
And they can answer all your questions and, address any concerns you might have.
It's definitely worth the time and effort to get pre-approved.
I agree. It's a crucial step in the home buying journey.
What are some common misconceptions about pre-approval?
Some people think it's a guarantee that they'll get a loan.
That's not true, right?
No, it's just an estimate based on your current financial situation.
And things can change between pre-approval and closing.
Exactly. So it's important to keep your finances in order.
So if you're thinking about buying a home, take Brent's advice and focus on those three key areas: credit, capacity, and cash.
And don't hesitate to reach out to Brent Knapp at the Loan Factory for help. You can call him at 817-881-2600.